So hello guys, this is Anshuman Rao and welcome back to another video. So this video is gonna be about the weekend analysis of gold and the pound yen GBP/JPY. So without wasting any time, let's jump into the video. So straight to the point, we will jump into the gold first. In day trading, the maximum time frame which I recommend to use is the daily time frame. So basically, in my setup I develop a confirmation bias using the daily time frame. So in the daily time frame, the price action, and my setup is purely based on price action, by the way. So in the daily chart price action, we can see that we were in a bearish trend and we just move slightly upwards, and here there is a resistance over here. So we started reversing from this resistance which I already marked. Before starting the recording, I already marked the respective and the important zones, so that no time, no, not even a single second of your time is wasted. So this is the resistance zone I have marked previously. And what the price action we are seeing in this daily time frame daily chart is that we moved from this resistance zone. We moved bearish, strong bearish move, and up till I think 1333 pips. So it's a huge bearish move. Bearish move. So from this we started reversing, and we continued the reversal. So but as you can see here, there was a slight retracement in the previous bearish trend. So we consider it as a daily major resistance. Actually, we considered this also as this is the secondary consideration, but this is the primary consideration. So why we considered it as a why this we what I am telling is, why we considered this as a primary consideration as a daily major resistance. The reason behind this is that this is the candle of 3rd January, of Friday 3rd January, before weekend closing. So, and this is the 2nd January candle. So this is a bullish candle, and this is a bearish candle. So we formed a resistance. Simple. So this is the resistance. The major resistance we formed in daily chart, and if we lower the time frame, then we get a clear market structure over here. So as you can see that the zone we had already marked in the daily time frame completely respects the 4-hour time frame of gold. So the daily measure resistance, as you can see how cleanly it respects this candle closings over here, and this also over here. So if we have to plan according to 4-hour time frame, as you can see here, if we have to plan a bullish trade, like if we are seeing for some sort of longs in gold, buys in gold, then we will be waiting for, I guess, as per the present price action, we will be waiting for a candle to we will be actually waiting for the move to up till here, up till this zone, in the 4-hour time frame specifically I'm saying. So we will be waiting for the price to break this zone and close above this zone, and so that we can capture this clean move on the left hand side. So suppose as we assume that the candle closed over here, and the candle closed over here outside of the zone, so we will be taking entry over here. So it is a 255 pip range. If we round off at least 250 pip range, this whole complete range is at least 250 pip range. So out of 250 pip range, as per the 4-hour time frame, we can easily capture 190 pips as per the present price action. So if we lower the time frame even smaller, then we get even detailed price action, as you can see here, even detailed price action in the 1-hour time frame. So we in the 1-hour time frame, as you can see, the clean ranges over here, So yeah, I'm just telling about you the bullish directions. Like I'm just telling about you for the buys in gold. But if we want to take shots in gold, what we have to do is, because as per the present trend, as you can see, the trend is bearish. So what we have to do is, the main agenda, now we will be not looking for buys in gold, because buys in gold we have to wait a little bit. But what we are seeing, you know there is a very 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 famous proverb in trading, that the trend is your friend. So we always go for in the we always take we always confirm we always develop a confirmation bias based on the recent trend which is going in the market. So the trend is always your friend. According to the trend, you have to develop a confirmation bias, and entry exits and the stop loss and TP will be according to your trading setup. So the trend, the if you whether you want to take a buy or whether you want to take a sell in a particular financial instrument, that should be determined considering the present trend of the market. So as you can see in the 4 hour time frame, the present trend of the market is simply bearish. So we will be our main focus, I think, for next week will be mostly bearish, but we will see the price action there. But this is now considering the present price action, I'm just doing the analysis. So in the 1 hour time frame, as you can see, we are still bearish, obviously. So in the 1 hour time frame, what we can see here is, if we want to take a short in gold, what we have to do is, there is a resistance over here, as you can see on the left hand side, and there is a small clean range over here. So this small clean range over here is about 25 20 at least a 25 pip range. But there is also a common rejection point here. What common rejection point is, like, it is also support. Sorry, if I mentioned it previously resistance, pardon me, but this is a support over here. So I anticipate the price to break and close above this zone over here, so that I can place my entry, and I can wait for the price to come to cover at least 25 pips. If it covers 25 pips, means it is entering this key zone, this key common rejection point over here, this key common rejection point over here. So why I considered is it as a major common rejection point support is that this, you can see the wicks, so many wicks are there. So 1 2 3 4 5 6 7 7 wicks are rejected from this zone. Means it, this is a key, in this area there is something that is pushing the price, due to which the price keeps on rejecting. And it is also, as you can see, it is also a support over here, because a bullish candle was formed, sorry, pardon me, again, bearish candle was formed in a bullish trend. So as you can see here, we can consider it as a support also. So what we are trying to say is, like, if we want to take shots in gold, my setup will be simple and sexy setup will be, so I will be waiting for the candle to break and close below this zone, and I will be placing my entries, and anticipate for the price to move at least 25 pips, which is about, means it will be entering this zone. And I will wait for, and again I will be waiting for the market to close, to break and close below this zone also, so that I can add up more quantity. And let me show you what this zone is. As you can see, this is a 80 pip range, 85 pip range actually. So it's beyond phenomenal. So yeah, this is the simple analysis of gold. As we if we hop into the 30-minute time frame, which is, we get a very clear market structure over here, as you can see. And if we consider this horizontal ray, this common rejection points, so there is a high probability for the price to cover this range also, about 65 pips, if it breaks this line over here, because this is something, the lowest of the common rejection point I just marked. So this is a simple price action strategy which I'm following in my setups. And in the long run, as you can see, I have many wins, also many losses. But in gold, these are the don't mind these trades, actually these are the previous trades. And mostly what I do is, I don't journal my winning trades, actually. And I just keep a notes of my winning trades. But mostly, I guess, you will find in my YouTube channel, I journal mostly my losing trades, so that I can be, I will be, so the video is accessible to me also, that I can look backside, I can look into the past, and I can realize what mistakes I have done, because due to that, I lost the mental capital and also the trading capital. So this was the analysis for gold. And let's jump into the GBP analysis. As you can see, last week we covered a huge 2.6 hour move in GBP, and also we lost money on GBP of around, but still, then let me show you the account in which I am trading. And I just started this account last week. So this is the account in which I'm trading, the Alpha Capital Group account, and we are still in positive, as you can see. So this is the account which I started last week, as you can see, last week 30th. So on Monday we gained about 1%, close to 1%. On Tuesday, there were probabilities that it would have been a losing day, but still then we managed it to close in plus. Not so, but it is, you can consider it as a pretty much break even. But on the first, as you can see, on the 1st January, forex market holiday due to new year celebrations, and on Thursday we had a biggest gain, but on Friday we just lost it. And but we are still in plus, because on Thursday we gained about $771, but on Friday we lost about $763. So the thing is, I'm not bothered about this loss, but the thing is, I should have preserved more capital of mine, and I should have decreased my, because in this area, in this day, on, I guess, the last day, on the Friday, I realized there was some kind of over trading that I did. And I also broken like the trade breakdowns are available in my video. You can I will just drop the links below, and you can watch it. There was some kind, yeah, again, there was some kind of over trading, and not, I would not say revenge trading, but yeah, there was some kind of over trading, I would say. Like, I over risked somewhere, due to which the amount which I gained on Thursday, pretty much I blew on Friday. So yeah, but we are still in positive, due to the win rate. Obviously, the win rate, as you can see here, we have 46% win rate, which is good, which is absolutely phenomenal. People with 30% win rate are still profitable. So we have a 46% win rate. That's this is pure data. I'm showing you my pure data based on my trading setup. So you don't doubt my trading price action setups. So this is the win rate over here. This is pure data of my setups, and yeah, that's it. So this was all about the video, guys, and I hope you liked it. And in the GBPJPY, as you can see, we have we just broke above this candle, and we are just pretty much reversing back over here, but we will see what price does. But we have GBPJPY actually is my secondary focus. My primary focus is gold. So in GBPJPY I don't stress much, but GBPJPY and gold, I think the correlation is pretty much inverse. When gold is bearish, GBPJPY is bullish, as you can see here. And most of the times which I realize that when gold is bearish, GBPJPY is bullish, as you can see. When gold is bullish, GBPJPY is bearish. So this is a correlation, I studied in the last 1 year of trading. So yeah, these are the only two instruments that I trade, so you have to be familiar with your correlation of the instruments, so that in the end it is helpful for your trading setup to develop a confirmation bias. So these are the clean ranges over here. This range is over 16 pips, 15 pips actually, and this is over 40 pips, 39.5, yeah, 39.5. So in total, I guess we can consider the capturable pips amount is, I guess we can easily capture about, I guess, 25 pips, yeah, 25 pips. So yeah, this was all for the video, guys, and I hope you enjoyed this video. Especially the main focus was, I hope you gained some knowledge out of my video, so this was all for it. Thank you, bye bye, take care, peace out. This was the weekend analysis.